30,500. And what's a remarkable here is that you just continue to hammer on this. On Friday, we saw a push above it, but by the end of the day, we closed right at that level. And here we are down ticking again. Granted, it's the weekend, so, light volume, it's one of those weird things, right? Bitcoin's open on the weekends, but I don't put a lot of stock in the price action on Bitcoin because it's such light volume over the weekend. But I think that Monday is going to be a pivotal, Monday, Tuesday, very pivotal for Bitcoin, because you'll get some more price action going in there with the markets open and yields and the dollar moving. The question is, can it break above this level?
According to market capitalization, this is the calm before the storm for Bitcoin. However, many respected experts, such as widely read technical analyst Gareth Soloway, concur that the storm could go either way for the largest crypto asset. U.S. Consumer Price Index data from March showed that inflation had temporarily eased, so the leading cryptocurrency asset continued to rise last week. However, it appears that Bitcoin, along with the rest of the market at the start of the weekend, is giving back some of those gains. Next week, as we continue into the 2023 Q1 earnings season, the market is expected to reach a critical point, as predicted by Gareth Soloway. On Friday, JP Morgan announced a rise in deposits that came out of the blue, and it raised its projections for net interest income, a key profitability driver directly related to loan operations. The financial giant stock jumped 7.6% on Friday after the unexpected increase, its biggest daily gain since November 2020. Soloway gives his forecast for the economy and various asset classes like Bitcoin, the SP Index, and gold for solid way in a recent interview with Greg Dickerson.
My level, again, we talked about this, I think it was about 2+ weeks ago when we were chatting, 30,500. If it breaks above that level, like I think we talked about a couple weeks ago, for me, it needs to show me that it can stay above there for a certain amount of days, multiple days, versus just a quick blip above, fooling everyone and then coming right back in. But this is a huge level psychologically, right? I mean, this, again, we talked about this last time, but you're going back to these levels here, going back to the lows of the bull market, even the pre-big run here, and then even this consolidation area over here. And that's my biggest issue, is the charts right now still show that we're into this area. And then number two is, to me, the bullish sentiment in crypto right now is very similar to when I made the call that 69,000 was going to be a fall and we were going to go to 20,000. And it's that psychology. We looked at that psychology of the market chart earlier. Those things are kind of eating at me in terms of whether or not this bear market is fully over. Now, whether or not we've made the lows, obviously, we should know in the next 6 months or so. But at least in the near term, something likely to me will trigger a sell-off back down a little bit. I'm still in the camp personally that it's still mostly, I would say 3/4 of it is a risk asset. What I've noticed over the last 3-4 years of Bitcoin is that it was 95% a risk asset. Well, at one point it was 100%. Then it was 95, then it was 90, then it was 85, 80, and now we're at 75. So like through the banking crisis, there's no doubt about it. That was an awesome situation for Bitcoin. We showed it decouple when the markets were selling off there. So I think it's slowly maturing. It's kind of like an adolescent that needs to get into adulthood here and mature. But I still think that in this scenario, if you see a real panic hit the stock market, we see, let's say, 20% down, my guess is it does decline for the most part. I think like gold, even in all fairness, if it's full out panic, everything declines, right? We even saw gold and COVID quickly dip before recovering. But the question then is, if it's a longer term bear market in stocks, I still think it does put pressure on it. But again, slowly it's maturing into a gold type entity.
Let's take a look at gold real quick. I'm seeing a triple top in gold with a big reversal. What are you looking at?
Yeah, so I'm with you on that one. Is you're definitely coming up to that. We did hit just on Friday or Thursday this upsloping trend line right here through the recent highs. So to see a little bit of a sell-off there, not a big surprise. But I agree, you're coming up into a range where there's going to be a massive wall. Usually at triple tops. So triple tops are different than double tops. Double tops, you usually see a big pullback. Triple tops, it's usually a slightly lesser pullback. And then a breakout. So again, usually you'll see that type of action. So if we did get up there, I would still expect a pullback, but it would be a shallow pullback, maybe 1900, maybe 1875 before that next leg up. I still think that gold in terms of risks is probably the lesser of the risky assets to be in here with a decent reward to it. We saw the bank earnings on Friday. JP Morgan was really the standout, and that was a tremendous report. Again, they blew it out of the water. Interestingly enough, what I noticed was that while JPM was up, we saw a lot of the regionals continue to fall, and that's never a good situation when you have good earnings from one bank, but the rest can't catch a bid. So that's a little bit of a concern going into next week. I also thought that the early sell-off in the S&P 500 was concerning as well, where you had this good news, the PPI came out the day before, everything was kind of rosy, and the markets opened up, and then they just gave it all back. And essentially, we closed flat on the day. Late in the day, we got a little float, but that's normal on a Friday with light volume. At the end of the day, the big players kind of leave for the day, and you see that gentle float back up. So overall, the price action wasn't good on Friday considering. And it is interesting to kind of see how the markets are shaping up here. We got this potential doji on Friday. Again, we have to see what the market does next week. But I think, like you said, it's earnings, right? We have the Netflix earnings on Tuesday after the close. Wednesday after the close is Tesla. And then the next week, we have all the big tech play companies coming in. So, as I look at this market, one of the big things, and I did a video earlier this week, but I know a lot of people didn't see it yet. But one of the things that's concerning me is something that my head trader, Ben, pointed out, which was this pattern here, right? So what we have is this down move from the all-time highs on the S&P 500, and then even though it looks like we're making higher lows, if we look at a chart, and I'm gonna switch screens here, I want to show you guys this because this is really earth-shattering to me in terms of what it could entail. So this is the psychology of the market, right? And we've all probably seen this chart at some point in time. But if you look at the move we had, so here was your run, let's say from COVID up, right? So the big move to the upside. Then here was your high in 2021 and the sell-off that followed. And then look at the price action following that. You're generally seeing the same, almost to a T, almost perfectly the same pattern, which denotes the complacency period on this psychology of a market chart. And what we know is that following that in general, we have a bigger down move. So to be honest, looking at this, looking at how the markets have been behaving, I do think that there's a bigger sell-off coming in the works here in the not too distant future. I look at past bear markets, and this one to me could be worse than many of the past ones because you actually have a Fed that has hiked rates percentage-wise bigger than really any time in history. I don't remember, even in the 80s, you didn't see the percentage-wise. Like here we went from 25 basis points to 5%. I mean, think about how many hundreds of percentage points that is, even versus the 1980s where we saw those interest rate increases. So that to me has to at some point play out as a shock to the system that finally comes to fruition. And it is something that I do think we will see not only the October lows of 2022, but even further on. If we flip over to the Apple chart here, right? Apple's had a remarkable move. Absolutely remarkable move off of the lows. It's not that far off all-time highs, but if you compare Apple's chart to a lot of the other just average companies out there, you've seen rotation into what we would call best of breed as a safety play, right? So Nvidia, Apple, Microsoft, right? And to me, that's a concern because it's not that people believe that Apple is a great value here. And in all fairness, I think it trades at like a 30 or 25 forward PE, and historically that's even rich even in bull markets. But it's more that are people just hiding in those plays while the rest of the market continues to kind of languish. And you could bring up a bunch. I mean, there's so many just kind of average companies that aren't known as those special companies, and their charts are not very good at all. And again, to me, it spells people hiding right now, and then at some point they will get freaked out enough to even exit those. And when we see Apple and Nvidia and Microsoft collapse, that's where the NASDAQ really comes hard down.
Do you agree with Gareth Soloway's assessment of the market and the economy as a whole? Leave your thoughts and feedback in the space provided. Thank you for watching Market Empire. If you found this video useful, please give it a thumbs up and don't forget to subscribe to our channel for more insightful content. We appreciate your support and look forward to bringing you more valuable insights and analysis in the future. Remember to always do your own research before making any investment decisions. See you in the next video.